Let me quickly talk to you about personal lines of credit that pull Equifax for fair credit. So here are 4 banks that bless you with large amounts real fast.
One in a million, one in a million, one in a million. You know they're coming up to me, cause I'm just the kind of flower that's stinging in the beat, but the rhythm's getting higher. Go, 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 go. One in a million, one in a million, one in a million, one in a million, one in a million.
Welcome back, folks, to another edition of the Awesome Sorty Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you ever ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka. Now let's roll. In today's conversation, I want to talk to you about personal lines of credit that pull Equifax for fair credit. So here are 4 banks that bless you with large amount real fast. So number 4, we have here BMO Harris. Our score 8.2 over 10. So when you think about BMO Harris, I want you to think about a line of credit that actually can go as high as $100,000. The only thing is you need to have a relationship with BMO Harris, and they want you to apply at a branch. Okay, you can apply at a branch or over the phone. So for the phone number is 1-888-340-2265. So 1-888-340-2265. And the cool thing here is that the APR is kind of decent. It starts around 11.50%. Okay, 11.50%. This is really good. So with BMO Harris, you're getting your cash real fast. Okay, and you also need to make sure that you can get the cash via check, via a debit card, or via a special account. The only thing is that BMO Harris is geographically restricted, so you got to be actually in the states where they're operating. So I'm talking about Arizona, Florida, Illinois, Indiana, Kansas, Minnesota, Missouri, and Wisconsin. Okay, and one thing I also want to say here is that BMO Harris is very flexible in terms of what you can achieve with the personal line of credit. So they will allow you to do home improvements, emergency fund. You can consolidate your debt. You can, if you're trying to have the perfect wedding, this is also possible. You can use the line of credit for educational expenses or to manage your cash flow. So the possibilities are endless here really. Okay, so how do you qualify for a personal line of credit with BMO Harris? Well, you need to actually first have a 600 minimum FICO score. You need to demonstrate that you have a full-time job or a part-time job, but you need to make at least $24,000 a year. That's $2,000 a month gross income. Okay, and one thing for sure is that there are no fees. There are no major fees associated with this personal line of credit from BMO Harris. The only fee that you need to think about is there is an annual fee of $25. That's it. Now, but that fee is waived the first year. So the first year you're not paying any fee, but after that you have to pay a $25 fee. But remember that the maximum line of credit amount here is $100,000. But you got to have a relationship with BMO Harris. That's for sure. Number 3, folks, we have here Fifth Third Bank. Our score 8.9 over 10. So when we talk about personal lines of credit that pull Equifax for fair credit, Fifth Third Bank is a great bank to consider. So we love the fact that you actually have a lot of flexibility in how you can use the funds, how you can tap into the funds and whatnot. And what we love here is that the line amounts range from $5,000 to $100,000. Okay, and the thing is, if you want to qualify for this, you need to have up to 10% of verified liquid assets. Liquid asset means you can have cash or marketable securities, so that's stock, bonds, and everything must be held at the Fifth Third Bank account or brokerage account. Okay, and the cool thing here is that you have a 20-year draw period with balance due at maturity. Now this is really interesting because if the full balance is due at maturity, then you have to be very careful in terms of budgeting. Okay, because if you have to make a balloon payment at the end of the 20-year, that could be a lot of money. Here you have interest only monthly payments. Okay, the APR ranges from 5.50% to 7%, and there is a $65 annual fee that is waived the first year. Okay, and you can access funds at closing via online transfer, checks, phone, or in branch. Totally possible. So this is for the unsecured line of credit. They call it unsecured flex line at Fifth Third. But Fifth Third also offer a secured line of credit. So if you are willing to, if you want to borrow more, if you want to access a larger amount, a larger line amount, and you also want to benefit from lower APR, then you can collateralize the line of credit. You can pledge an asset or several assets as as collateral for the line of credit. So you can secure your fund. You can secure this line of credit with your funds in your Fifth Third savings account, CD, or investment account. Okay, so here we are talking about line amounts that range from $5,000 to $500,000. Okay, $5,000 to $500,000. Here you have to have between 50% to 100% collateral. You have a 20-year draw period with balance due at maturity. You have interest-only monthly payments, and the APR is really low because it oscillates from 3.25% to 6%. This has no annual fee, and you can access funds at closing via online transfer, checks, phone, or in branch. Okay, the requirements here: the income at least $18,000 per year. And remember, the income must be verifiable. The FICO score 600 to 850, with 550 if you have an NPR with them, a multi-product relationship with them, and your CUR, your credit utilization ratio must be 40% at most, and your DTI must be 38% at most. And co-application is totally possible. And Fifth Third reports to all three credit bureaus. Number 2, folks, we have here PNC. Our score 9.4 over 10. So when we think about PNC, we are talking about the fact that PNC is kind of cool. It's kind of flexible in terms of their line of credit. So they pull Equifax for fair credit. Okay. So if you have a FICO score of minimum 625, this is fine. You got to have a relationship with the bank. They want you to have a DTI of 35%. Same thing for CUR. So 35% is the maximum. You got to be employed for 2 years at least, or have a combination of a part-time job that actually are in aggregate are amount to the same 2 year. Okay. And one thing I want to say here is that the line of credit can actually go from $10,000 all the way to $35,000. We have seen people being approved for a line of credit at PNC for $50,000. This is really good. And one thing we love here is that PNC will approve you, and you can actually apply online, over the phone. Okay, at a branch if you want to. We would recommend that you apply at a branch or over the phone. So you can call 1-877-CALL-PNC, 1-877-CALL-PNC, and you can actually start from there. It's very important to understand that the PNC is not going to determine your APR and your line of credit approval unless they see your data. So they see your personal records. So we are speaking about your financial statements. We are speaking about your bank statements. We are speaking about your proof of employment. So your pay stubs, your tax returns for the last 3 years, your bank statements for the last 3 months. Okay. They want to have your W-2, your 1099s if you're self-employed. But the really important thing is you want to have a relationship with PNC. So you need to have a checking account and or a savings account, so they can actually see that you have a relationship with you, and they can actually lend you the money. So pay attention to your payment history. If you want to get the PNC Bank line of credit, make sure you have a positive payment history. Very important. You want to also pay attention to your debt to income ratio. As I said before, your DTI ratio should be 35% maximum. PNC pays attention to that because they want to make sure that you have lived a life of financial responsibility so far. The drop period can actually go all the way to 5 years. We've seen people who got approved for a drop period of 10 years, and the repayment period either can be a balloon payment at the end of the drop period or a series of payments. It's totally negotiable. So just make sure you ask all questions about that before you apply. Number 1, the best of the best in our view when it comes to the personal lines of credit that pulls Equifax for fair credit, and the 4 banks that bless you with large amount real fast. Number 1, Citi. Our score 9.7 over 10. So with Citi here, you have a line amount that goes from $1,500 to $25,000. Okay, and the APR here goes from 10.49% to 22.49%. But what we love about Citi is that not only they are financially available, so they have a nationwide footprint. Okay, that's number 1. Number 2, their income requirements are kind of low. They want you just to have $10,500 $500 minimum income. That's gross income per year. So this is actually available. This is accessible for a lot of folks. Okay. And what we love is that Citibank still has a problem with their customer service though. They need to fix that, but they are doing a good job so far. They are improving their customer service. Okay. And they do not charge you. Citibank does not charge you a statement balance fee. Okay. They don't charge you a cash advance fee. Not at all. Okay. And one thing I want to say here is that they might charge you a late fee of up to $10. But other than that, this is really what it is. And what do you need to qualify for? A Citibank custom credit line. That's the name they call it. So you need to have a FICO score between 600 and 650. And you got to have a relationship with Citibank. And you need to have a gross yearly income of $10,500. That's what I just said. So those are really important. Now, the thing is that Citibank will actually report to Experian, Equifax, and TransUnion, but they do pull Equifax to make a decision. So you can apply actually for a line of credit on the website if you are an existing customer. You can actually pick up the phone and call Citibank and apply over the phone, or you can apply at a branch. Our recommendation is that you apply at a branch so you can actually contextualize the application. You can ask questions, you can ask all kinds of questions, and you can gauge your approval odds. This is really important. So we always tell viewers to actually apply at a branch because you have a chance to hold a conversation with a rep. You can ask all questions, and so you can tell based on the answers they give you whether or not you could qualify if you were to apply. So think of it as this is an instant soft pull process where you are basically getting feedback about your application, okay, your odds of approval. So this is really great. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Sweetie Kiwi Show. So I gave you the 4 personal lines of credit that pull Equifax for fair credit from big banks, and let's just have a general conversation about this subject, because a line of credit is an important subject. A line of credit can give you the funds you need for a lot of things. So let's just go back to personal line of credit 101. What is it? Well, a line of credit is a type of financing that allows you to withdraw funds as needed up to a predetermined amount. So there are a few important factors you should keep in mind though. Interest rates are variable. That means your interest rates are subject to change, and you won't have fixed monthly payments. Okay, you only pay interest on the money you use. So as a revolving line of credit, you will borrow money on an as needed basis up to the limit. No collateral is required if you are talking about unsecured. So you may qualify for a personal line of credit without taking without backing the loan or the line of credit with your home, with your vehicle, or other property. Fees vary between institutions. So some institutions charge a fee each time you access your credit line, and others charge an annual fee. And those with low or no credit may not qualify. So banks and lenders rely on your credit score and payment history when issuing personal lines of credit. Okay, and secured financing may be an option. So you may lock in a better interest rate, and you can be more likely to be approved with a secured line of credit. Okay, so personal line of credit interest rates work in a very funny way. So they are variable, meaning what? They are subject to change at any time. So this can make it more difficult to predict your monthly payments and total financing cost. However, the bank or issuer may give you an advance notice that your rate is actually changing. One thing you need to understand here is that with lines of credit, you only pay interest on the money you borrow, right? Which makes those lines of credit a good option if you will not know the final cost of a financing venture, for example. So interest accrues as soon as you withdraw funding and will be added to your monthly payment. Okay, so one thing you need to understand, you can use a line of credit for several reasons. So for home renovation or repair, for emergency funding, for ongoing medical costs, for moving and relocation expenses, right? For example, for wedding deposits, for business startup costs, for funeral expenses. So anything that is ongoing in nature, you might want to think about a personal line of credit to finance it. Here is a bonus tip that I want to share with you in terms of how to get a personal line of credit from a big national bank such as Citibank or PNC. I mean, PNC is the regional bank, but you get the idea. Well, it's really important first to establish the relationship. And I've said this throughout the show. It's important to have a relationship with the institution where you want to get the line of credit. Okay, you want to park your cash with them so that in return they can also grant you the cash you need in a personal line of credit arrangement. This is really important. Once you do that, I want you to check your credit score. Checking your credit score is really important because personal line of credit eligibility is based primarily on credit worthiness. So it's good to know your credit score before you shop anyway, okay? It's important. You need to determine the amount you need. So boss, I want you to have a general idea of how much money you will need access to on a rolling basis before applying. So we're talking about a continuing basis here, but you got to have a clear idea of the amount you need, right? So you don't actually have to reapply down the road. And you want to research banks and lenders that work for you. So you remember, some banks specialize in low or no credit, while others may be a better fit for small amounts of funding. So think about that, how much you need and which banks are you more comfortable working with. And you also need to apply for a personal line of credit the right way. So remember that the financial institution, the bank or credit union that you apply at, they will want to analyze your income and credit score. And you may need to provide identifying documents and income verification like pay stubs, W-2s, 1099s. Okay, so once you actually do all this kind of stuff, you are ready to receive the funds you need. So with a personal line of credit, you have access to the money you need real fast. Okay, you may be given checks or a card to access your line of credit. It really depends on the institution. Some institutions, some banks for that matter, they actually will create a specific account from which you can deposit, you can actually withdraw the funds, okay? And they will actually replenish that account if you actually request the funds. So it really depends on the institution, but all of them have their way of working. But one thing that's very important is you need to plan the repayment strategy. You need to plan the repayment process. It's important. You are spending the cash today, but you got to think about how and when to repay it, because because you have the draw period. So in a line of credit arrangement, you have the draw period, but you also have the repayment period. So make sure you have the appropriate funds, the proper number, the proper level of cash when the repayment period kicks in. Before I close to this conversation, let me talk to you about, I want to give you a few pro tips that will help you actually navigate the whole personal line of credit world. So the thing is, can you get a personal line of credit with bad credit? Let's just talk about that. Well, you can. It's totally possible, but it may be difficult. So it's important that you actually understand that. Personal lines of credit are typically reserved for consumers with a good credit score. I'm talking about 670 and higher. Okay, so this is important. However, if you have the right relationship with the bank, if you are able to have a lifelong relationship with them, and you have a history of positive cash flow, no matter where your credit score is currently at, you could get a personal line of credit. So I want to emphasize that a personal relationship with the bank is really important. But if you don't qualify for a line of credit, don't forget you have alternatives. You can get a personal loan, right? You can get a credit card. It's not the same, but it does actually help you have the cash you need. And if you have a house, you can actually get a HELOC, a home equity line of credit. So a home equity line of credit lets you borrow money against the equity you have in your home. Now, a HELOC just works like a personal line of credit, except that it is secured by your home. So interest rates are variable, meaning that your interest and payments may increase. So since a HELOC is secured by an asset, borrowers typically see lower interest rates than they would with an unsecured personal line of credit. The only thing you have to understand is that HELOCs typically come in with closing costs, which can include a home appraisal fee, document preparation fee, and title insurance, for instance. And since you're putting your home up as collateral, you risk losing it if you default on the payments. So this is really important. But a HELOC is a good alternative to a personal line of credit for homeowners, as long as you are confident in your ability to make payments on time. This is really important. I want to repeat that. A HELOC is a good alternative to a personal line of credit for homeowners as long as you are confident in your ability to make payments on time. Okay, very important. Do not skip payments. And also, one thing I want to say here is that the fees associated with the HELOC may be offset by a lower interest rates depending on how you plan to use it. So be careful when you get a HELOC, but it is totally possible. But if you are too scared to use a HELOC, try on a credit card, try a regular credit card, or just get a loan. Those are less, quote unquote, less risky alternatives. Before I recap today's conversation, please check this loan evaluation approach video. We have a strict methodology on this show when it comes to evaluating, when it comes to categorizing and listing loans and lines of credit on this show. Check this out. All right, let's quickly recap here. So here are the 4 banks that give you large amounts when we are talking about personal lines of credit that pull Equifax for fair credit. Number 1, Citi, 9.7 over 10. Number 2, PNC, 9.4 over 10. Number 3, we have a Fifth Third Bank, 8.9 over 10. And number 4, last but not the least, we have BMO Harris, 8.2 over 10. Thank you so much for your attention. I really appreciate it. God bless you. I'll see you next time. But until then, remember, stay marvelous.